Markets failed to hold opening gains as financials declined. Nifty and sensex and mildly lower. The mid-caps outperformed the blue chips.
DMart Auto Avenue Supermart was under pressure after missing estimates on Q1 sales and concerns over rising competition from quick commerce that some analysts believe can also dent the margins.
FSN e-commerce, the promoter of Nykaa, also ended lower after early investors Harinderpal Banga and his wife Indira Banga sold over 2% equity for nearly 1,200 crore rupees. Fear of further selling remains an overhang.
Hello and welcome to Markets Forward, your go-to show where we aim to get you all the key data points to gear you up for the next trading session. I'm Vinny Motiwala. With me is my colleague Hormaz Fataki as well. Hormaz, an interesting day coming in, but the whole week has been like this, right? A bit of a consolidation, a bit of a correction coming in after the run-up last week.
A very typical expiry day as we have seen in today's session as well. And we've got you covered over the next 20 minutes with all the big news, the key developments on Dalal Street, the top corporate voices and the events to track ahead. But of course, let's kickstart the show with today's market action. And it was as a typical expiry session, as we just mentioned. We opened higher. We managed to hold on to some bit of gains for a better part of the session, at least till the first half. But then the selling pressure started to emerge in the second half of this weekly options expiry. The Nifty came off the highs of the day, huffed and puffed its way, but managed to hold on to that 25,400 mark by just. And the other good bit is the fact that it managed to defend yesterday's low. It did that convincingly yesterday. Today, not quite, but the broader markets did fairly well for themselves. And the key culprit of this has been the Nifty Bank. The Nifty Bank has been down almost 800 points now since it made its record high of 57,614. And from there, that underperformance has continued, and that has dragged the Nifty lower in evening.
Absolutely. That is something that dragged the Nifty lower today. But, just a couple of top sectoral gainers that I would like to highlight. Nifty Auto as well as metals. And among the losers, banks obviously is there. But PSU Bank saw a sharper drag like there in the overall market scenario, as well as Nifty Metal. That was among the drag coming in as well. So PSU Banks and metals were the top drags in terms of sectoral moves that we saw coming in today. But let's move on and look at the lineup that we have for you all in store today. We will start out with the top movers and shakers of the day with and then move on and talk about some of these individual stock names. So we do have HDB Financial Services. That is remaining on our radar for the last couple of days. The stock rallied while Nykaa shares actually slipped by over 4% on the back of a major block deal. Meanwhile, DreamFolks slips yet again after the closure of launch program. Last but not the least, we'll also delve into the market events that you should be keeping an eye out on in tomorrow's trading session. But first up, let's get started with our first segment for the day. We have Vivek joining in with us from the big wall to take us through the top movers and shakers of the day. Vivek, over to you.
Well, thank you so much for that. Like you mentioned, a roller coaster of a session. I did see significant volatility throughout the trading day. But quite a few stocks managed to do well. If you look at the list of gainers, pharma stocks today actually stood out. Most of the names doing quite well for them. So after a while, you did see the pharma pack move ahead despite the kind of uncertainty July 9th brings. So the entire pack, named like Natco Pharma, Ajanta Pharma, all of these stocks among the top gainers today. DCM Shriram, one stock as far as the NSE 500 was concerned, that particular stock managed to end the session significantly higher, almost 15% higher, strong volumes, top gainer on that particular index. And the other set of stocks that continued to do quite well for the second straight session was the entire hospital pack. So look at a name like Aster DM Healthcare, almost 10% higher. Indraprastha Medical, a Delhi-based company, again, that's doing very well. Max, Apollo, Fortis, all of these names doing very well in the session. One stock that had been under significant pressure in the last couple of trading weeks, in fact, today managed to bounce back quite significantly, almost 5% higher for Blue Star. They spoke to us earlier today, and they stuck to the FY26 10 to 15% revenue guidance. The market taking positive cues from that particular interview. And lastly, Motilal Oswal Financial Services, that particular stock almost 9% higher, the top mid-cap gainer today. But quite a few stocks under pressure as well. And like you mentioned, the Nifty Bank was under pressure, largely led by the underperformance of the underlying constituents. So some of the banks, especially PNB, a slightly muted quarterly update, Kotak Mahindra Bank, a downgrade by Macquarie, all of these stocks ended the session significantly lower. Capital Small Finance Bank, one NBFC, slightly muted operational update, that stock ended near the day's low. lowest point. And also, Nykaa, like you mentioned, the large block deal, the supply overhang over there almost 4% lower. And SBI Life, both the insurance stocks, SBI as well as HDFC today under pressure, but SBI Life, the top Nifty laggard today.
Vivek, thanks a lot for that, a summarization of the movers and shakers in today's session. Let's go across to our guests then. We're being joined by independent market expert Ambareesh Baliga and Ruchit Jain from Motilal Oswal Financial Services. Ruchit and Ambareesh, good afternoon. Thank you for joining in. Ruchit gets the levels out of the way first. Still somehow managed to defend that 25,400 mark on the index even today for the second straight session. How important is that level? And if we do go below that on a sustained basis, what are the levels that you are watching out for?
Yeah, hi, very good afternoon to everyone. Well, I think we are going through a phase of more of a time-wise correction within an uptrend, where last 3-4 trading sessions have been no more consolidation within the range. Yes, 25,400 is very important support. Looking at the lower time frame charts, where the markets have been bouncing back in last 2 or 3 trading sessions. But if we slip below the 25,400 next 1 or 2 trading session, then I think next logical support would be around the 20-day exponential moving average, which comes around 25,200 to 150 zone. So even if that if the market tries to test that 20-day support, that won't really change the broader trend, but rather that would relieve the overbought setups and could form a base for the next leg of rally. So it remains a buy and dip market as the overall trend remains positive, but just for very short-term traders or swing traders, some consolidation or time-based correction could continue.
Okay. Ambareesh, obviously I just want to know, because we are just going to be starting the earnings season as well. So what are we watching out for? Because now earnings will play a bigger role in terms of the moves that we'll see coming in for individual stock names as well. So what should we be watching out for overall in terms of markets? Larger end of the market or the mid and small cap?
No, I think it should be the larger end, in the sense the large caps is what we should be looking at. But again, I don't really expect too many positive surprises in like Q1. Basically because we started off with a tariff issue. I mean, that issue was there for at least the first 15-20 days of the quarter. And then, we had geopolitical issues. So I don't expect a major upside as far as earnings are concerned. I think it'll be somewhat similar to what we have seen in Q4 last year. And again, at the same time, I think the expectations from the analysts also are not too high. So I think that should be positive overall.
Interesting. On to the first mover of the day, and HDB Financial, the recent listing, they continued from where they left off yesterday. Remember, the stock listed at a 13% premium, and it built on to those gains in today's session as well, ending at 865. Gaurav is here with an analysis on the stock, the new listing. Gaurav, over to you.
Well, yes, as you rightly said, the continuation in the rally has been seen in HDB Financial. Even today, this 1 lakh crore AUM company has actually grown at around 20%, and we have already seen a good set of numbers in terms of valuation for the company. But at the same time, when we look at the current valuation, it still trades at a cheaper rate if we compare it with its peers. And let's understand how. When we look at some of the positives and negatives, there are actually few positives. First, let's look on the positive side. The gross NPA has been lower for the company, and that is the reason why there is actually some kind of advantage to HDB Financial over its peers. Other than that, when we talk about portfolio, it is well diversified. In fact, 73% of their portfolio is in secured segment, and it is well diversified and more granular if we compare it with the peers. And that is the reason it gives an upper edge to the company over other peers. When we look at PAT, there also we have seen 30% growth CAGR over the last 4 years, which is actually good if we compare it with other companies. But on the flip side, there are some negative points as well. First is that when we look at loan book growth, that was at around 20% CAGR, whereas we have seen peers growing their loan book at around 30% CAGR over the last 4 years. When we talk about ROAs, there also we have seen HDB Financial actually reporting a little bit of lower ROAs compared to peers, and the reason being that higher credit cost in FY25. From what we have picked from the management, they said that the credit cost is likely to remain in the same manner, and that is the reason there are some concerns around ROA. But considering all these factors, even after considering these, the valuation at 3.5 is still cheaper if we compare it with peers like Chola and Bajaj Finance, who are trading at 4.5 to 5 times price to book value. When we look at the valuation scenario, in fact, if even if we consider the stock price going as high as 1,000 rupees, the valuation could still remain in the range of 4 times price to book value, which is again at a discount to its peers. So definitely, it seems that investors are finding some kind of comfort given the rally, even if we consider coming days and some uptick in the stock price. It seems that there is some comfort in valuation for HDB Financial.
Okay, that's a word coming in on HTB Financials. But, let's talk about another stock as well before we go to our guests. Nykaa, that is the one we'll want to talk about because that was falling almost 4% in today's trading session. This came in after a big block deal and earlier backer in the firm is likely to have trimmed their stake. Now, what are the details on this one? What was the reason for that fall? Vivek is here to give us those details.
Well, late last evening, we told you about how, we were anticipating a large block deal as far as FSN e-commerce, that is the parent company of Nykaa, was concerned. And along expected lines today, two early backers, Harinder Pal Singh Banga, and along with his wife Indra Banga, today exited a little over 2% stake in the company. Remember, at the end of the March quarter, together they held over 5% stake. So the bigger worry is what actually happens to the remainder of the stake and whether it will continue to remain as an overhang as far as the stock of Nykaa is concerned. So over 2% equity, almost 1,200 crore worth of equity changed hands in the block deal today. The floor price of the block was at 200. And the stock, remember, throughout the trading session, and remember, the company just recently held an analyst meet. Post that, immediately you've seen a block deal coming in from a very early investor. So Nykaa, on the back of that, continued to remain under pressure today.
Indeed, under pressure is Nykaa. That overhang remains of any further potential stake sale from the early backers. Ambareesh, Nykaa, or even HDB Financial for that matter, this overhang of this insiders selling further stake, and more importantly, among all of these new age companies, this class of 2021, say the Paytms and the Nykaas, Nykaa has been sort of an underperformer which has not done much from its IPO price. Your call here, because are there better opportunities in this space, or would you go for would you still stick to Nykaa if you have a longer term horizon?
No, Nykaa from a block deal perspective, yes, we saw a bit of a damage, but it is not really corrected so much. So I don't think that overhang of either 2 or 3% coming should really bother too much because it's got really absorbed decently well. And if you look at the performance, it's been a stable growth. We're talking of a return of about 20-25% over the next 12 to 15 months as far as the stock price is concerned. I'm not really expecting it to be a multi-bagger unless, of course, we see the operating margins improving quite sharply from here and also the growth improving much more. But based on the consistent performance which they have shown, I think a stock like this can possibly give you 20-25% return over the next 12 to 15 months. So if one has, I think one should hold on. And if you're talking of HDB Financial, I think the IPO valuation was quite decent. Especially looking at the sort of grey market transactions which have been happening for the last, so many months. And since it was a large issue, really could not expect a huge premium on listing. So 13% premium was fine. But I think, over a period of time, we should see it gradually moving up. So I'll not be surprised if we see levels of about 1,000, 1,050 over the next possibly a month or two.
Okay. Keeping an eye out on HDB Financials as well. 1,000, 1,050 is what we could watch out for in the next couple of months. But let's move on. And banks, that is also in focus today. Why? Because we had PNB, Indian Bank, we had a CSB Bank as well, which came out with their numbers. Now, Q1 updates, that is what they came out with. What was the number looking like? What was it in terms for Nifty Bank coming in as well? We have Gaurav to give us all those details. Gaurav?
Well, yes, let's begin with Punjab National Bank. A weak set of numbers is what we saw from the company because loan book growth was just at 9.7%. Although deposit growth was strong, but let's not forget that CD ratio is now at 71%. So there is a risk that there may be some drag on the margins, and as a result, this stock was under pressure. When we talk about Indian Bank, there also we saw a decent set of numbers because loan book growth was actually in line with what they had guided. Even in terms of deposit, the growth was actually in line with the guidance of around 8 to 10%. Deposit growth was at around 9.2%, but there was another hiccup here because the deposit growth was largely led by term deposits, and that is something that was factored in the stock price as well. CSB Bank, on the other hand, came up with very good set of numbers. 30% growth is what we saw in loan book, and that was specifically pushed by the gold loan segment. In terms of deposit also, we saw 20% growth, and as a result, we saw some cheering up for the stock today. Capital Small Finance Bank, on the other hand, actually came up with weak set of numbers despite having low base, because when we look at the advances there, we saw a growth of around 16%, while deposits grew only by 17% on a year-on-year basis. Lastly, let's also not forget about M&M Finance, because disbursements were actually very weak for the company. It came in only at 1% on a year-on-year basis. AUM growth was at around 14%, and there were some concerns around the AUM growth, because if disbursements continue to remain weak, there may be AUM growth somewhere in the range of 12% is what the analysts were anticipating. But at the same time, Citi came up with a note and highlighted that there is a case that there may be some improvement in terms of asset quality. In fact, what they're saying is that the credit cost could be somewhere in the range of 2.1% versus what they were anticipating at 2.3%. So, and back of this, we saw a little bit of uptake in this stock today. So definitely on the back of the provisional updates, we are seeing some kind of action in banks and financials.
Gaurav, thanks a lot for that. Ruchit, the Nifty Bank has been the principal reason as to why the Nifty went higher last week, and now why is it moving lower this week? What are the levels you're watching out for on the Nifty Bank, and does this downtrend continue over the next couple of days because of the fact that you've seen almost an 800-point correction from the record highs already?
So I think some more dip could be expected in the Nifty Bank index, primarily because the index has formed a higher high on the daily chart, but technically the RSI has not formed a higher head, which is a negative divergence. And whenever such divergences has formed, and the indices either go through some time-wise or a price-wise corrective phase. But again, like we spoke about the broader markets, that does not mean the overall change of the trend, but just a pause, we can say, within an uptrend could be seen. 56,500, 56,400 would be the immediate support for Bank Nifty index, where the 20-day mark for the index lies. So I think some dip and some consolidation could be expected, but the overall trend remains positive, and hence as the index approaches the support end, that should be used as a buying opportunity, as the risk-reward ratio would again become favorable over there.
Okay. Keeping an eye out on those levels over there. But let's move on. And Adani Airports has said that the lounge access will no longer require middlemen. This comes a day after DreamFolks management said that it has been pressurized by two big airport operators to give up the lounge business. Madhya is here to give us the details on this front as well. What has Adani Airports actually highlighted? Madhya, over to you.
So Adani Airports CEO Arun Bansal has spoken about the airport's lounge business in a LinkedIn post. He said that passengers across India can now access lounges directly through Adani Airports platform in partnership with other lounge operators. He said that this has been made possible by the innovation coming out of the group's in-house digital lab. Bansal said that the fintech revolution has eliminated the need for middlemen across the sectors. In this case, he is referring to lounge access providers like DreamFolks. He went on to say that in today's tech-led world, only companies willing to disrupt themselves will survive, the rest will disappear. Remember, this comes a day after DreamFolks told CNBC-TV18, as you were mentioning, that it is being pressured by two large airport operators to exit the lounge business. They claim there's a coordinated campaign to damage their reputation and push them out of the market. For context, DreamFolks is a lounge access aggregator. It offers lounge access not just at airports, but also at railway stations, highways, and even visa centers. Now, just to add more context for our viewers, here's how the lounge ecosystem operates. The airport operator awards the lounge contract or runs it directly. The lounge operator manages day-to-day services. This could also be the airport operator itself. The access provider like DreamFolks connects passengers to lounges via partnerships. Payment gateways like Visa, MasterCard and RuPay enable the transaction. And finally, banks and credit card issuers tie up with access providers like DreamFolks to offer free entry to customers. So when Arun Bansal talks about eliminating middlemen, this means doing away with lounge access providers like DreamFolks. So in airport, where Adani is the airport operator, lounge operator, it will also be the lounge access provider. That's what we picked up from Arun Bansal's LinkedIn post.
Madhya, thanks a lot for that. Ambareesh, a final word from you on DreamFolks. It's been seen a significant value destruction already, and with now these negative developments that have emerged, where do you see this headed? Because the damage is already done, because investors have lost money. And is there any reason or any good reason to catch a falling knife like that?
As of now, there is no reason for catching a falling knife because last week the management came and denied the rumors, and now they've come back and said that yes, it's true that from July 1st the contract is off. But what I expected from them is that the plan A has failed. What they're doing for the last so many years. So what about plan B? I think they should have addressed that than coming and blaming possibly the big boy, saying that they forced us to move out. I was expecting them to talk something on plan B. So for the time being, I'll not cast the falling knife till I really understand the path ahead for this company.
Absolutely. Surely we'll keep an eye out on that. But on the technicals also, Ruchit, would you also be avoiding this right now? Given that fundamentally right now there are issues or, there are these problems going on, then what would you do?
It's definitely, because if you look at the positional charts, then post the listing, the stock rallied till August 2023. And it's been almost 2 years, we have not seen any kind of high top, high bottom structure coming in the stock. Irrespective of the rally that we have seen in the broader markets in this phase, we have not seen any kind of participation coming in from DreamFolks. So there are no signs of change in trend as of now. So the underperformance could continue going ahead. So better not to do any kind of bottom fishing over here as well.
Okay. Thank you so much, Ruchit, as well as Ambareesh, today for joining us on the show, talking about the markets as well as individual stock names as well. But on that note, we'll slip into a very short break, viewers. And after the break, we'll get you the top corporate voices along with the key market events to watch out for in tomorrow's trading session after this break.
Welcome back. On to corporate conversations that we had through the day. First up is Karnataka Bank. Now, the lender told CNBC-TV18 that the name of an interim managing director has already been recommended to the Reserve Bank of India and is awaiting its approval. Now, this comes after Sri Krishna Harihara Sarma, the managing director and CEO, resigned recently. The lender expects the Reserve Bank of India's response to come before the 15th of July. Now, the bank is now hunting for internal and external candidates for its next MD and CEO and adds that the change in management will not impact its growth trajectory.
Next up is Blue Star. The management says room AC and air conditioning industry could see a 25% decline in the first quarter. This fall is largely driven by unseasonal rains and subdued residential demand. However, maintains the growth target for FY26 in the range of 10 to 15%. Meanwhile, the company aims to achieve 15% in RAC, that's room AC, air conditioning market share, by end of FY26. Commenting on the inventory position, the management said it doesn't think inventory is an issue and that the company has taken a 25% production cut in the past.
Next up in the list is Godrej Industries, and the company recently announced a significant capacity addition in its chemicals business with a 750 crore rupee investment. The management says that this investment will help generate an additional revenue of 1,000 crore rupees annually and added that the company aspires to grow its exports to over 25% and domestic sales by 10 to 12%. And that's not all. It expects the bulk to specialty ratio to be 50-50 by 2030 as compared to the current ratio of 80-20.
Okay, now let's go across to Upasana, who's standing by to tell us which are the key events to watch out for in tomorrow's trading session. Upasana?
Okay, so first up, let us look at the global economic cues. Coming to UK first, S&P Global Manufacturing PMI data will be out tomorrow. In Europe, PPI data for the month of June will be out. And mind you, ECB President Christine Lagarde will be speaking tomorrow. Also coming back to home, that is India, foreign exchange reserves data will also be out, so we'll be closely watching out for that as well. Now let us look at the key stocks in focus on the back of corporate action. Container Corp tomorrow marks as the record day for their bonus issue in the ratio 1:4. Paras Defense, record date for stock split from 10 rupees to 5 rupees, and stocks like Axis Bank, Bharat Forge, AU Small Finance Bank, M&M, Biocon, Nestle, Petronet, LNG, all of these will be in focus as all these stocks go ex-dividend tomorrow. Aztec Life Sciences, right issue in the ratio 1:7. Vintage Coffee, board will consider fundraising plans tomorrow. And lastly, VRL Logistics, board meeting is scheduled for tomorrow on the back of bonus issue. So all in all, looks like quite an eventful day tomorrow.
The bigger trigger that Upasana missed out was the fact that tomorrow is Friday.
Absolutely.
On this edition of Markets Forward, more news and updates continue on the other side. From Vinny and myself, thank you so much for watching.